If you're a student or a parent looking to fund education in 2025, you've probably asked yourself this big question. What's the smartest student loan plan this year? You're not alone. With tuition fees still on the rise and the economy showing no signs of slowing down, getting a degree has never felt more expensive or more confusing. But here's the good news. In 2025, the world of student loans looks a lot different than it did just a few years ago. And depending on where you live, whether it's the US, Canada, or the UK, there are smarter, safer, and even cheaper ways to borrow for college than ever before. Today, we're breaking down the best student loan plans available in 2025. We'll compare federal and private options, highlight new repayment programs, explain what's changed this year, and reveal how you can save thousands of dollars over the life of your loan. Stick around, because this might be the most important financial decision of your early adult life. Let's start with the US. In America, the biggest news in 2025 is the expansion of the SAVE plan, saving on a valuable education. If you haven't heard of it yet, this is the updated version of income-driven repayment plans under the Federal Student Loan Program. Here's how it works. Under the SAVE plan, your monthly payments are based on your income and family size. For most borrowers, that means lower payments, and sometimes even $0 payments, if your income is below a certain threshold. What makes SAVE in 2025 especially powerful is that unpaid interest is no longer added to your loan balance. That's right. If your monthly payment doesn't cover all the interest, the government eats the difference. Your loan balance doesn't grow just because you're not earning a lot right now. And that's a game changer. Let me give you an example. Say you're a recent graduate making $35,000 a year. Under the old repay system, you might pay $200 to $300 per month and watch your balance grow because you're not covering all the interest. But under SAVE, you might pay $100 or less, and your balance stays the same, or even starts shrinking. Plus, after 20 years of payments, or 10 years if you're in public service, the rest is forgiven. So for most students in the US, the best plan in 2025 is to borrow federal loans first, opt into the SAVE plan after graduation, and explore forgiveness programs if eligible. That's the safest route. But what if you've maxed out federal loans or need additional funding? That's where private loans come in. In 2025, private lenders like SoFi, Earnest, and Discover are offering variable and fixed-rate student loans with competitive interest rates. But be careful. Unlike federal loans, private loans don't offer income-driven repayment or forgiveness. What they do offer is potentially lower interest rates for borrowers with good credit or a co-signer. Some lenders now allow you to pause payments temporarily without penalty or offer cashback rewards for good grades. So if you must go private, shop around. Use a loan comparison site. And always compare APRs, fees, and flexibility, not just the monthly payment. Now let's jump to Canada. In Canada, the Canada Student Financial Assistance Program remains the main source of federal loans and grants. But there's been a big shift in 2025. The Canadian government has continued its no-interest policy on federal student loans. That's right, zero interest. You borrow $20,000 and pay back exactly $20,000. No surprise charges, no growing balance. And that's a huge relief for students trying to avoid long-term debt traps. What's more, in 2025, repayment doesn't start until your income hits $40,000 per year. So if you're not working or earning below that, you don't have to pay anything back yet. Many provinces also offer their own student loans or grants. Ontario, for example, continues to provide OSAP funding that combines federal and provincial loans. If you're a Canadian student, always apply through your provincial portal to get the full funding you qualify for. There are also options to have your debt forgiven, especially if you work in rural areas or critical fields like healthcare and education. In 2025, British Columbia expanded its loan forgiveness program for doctors, nurses, and teachers in underserved regions. So keep an eye on those programs. They can wipe out tens of thousands of dollars in student debt. And then, there's the UK. In the United Kingdom, the student loan system is different from North America's. You don't start repaying your loan until your income crosses a certain threshold, which in 2025 is £27,295 per year under Plan 2. Under Plan 5, introduced for students starting courses in 2023 and beyond, repayment begins at £25,000 annually. What's interesting is how your loan is written off after a number of years. For Plan 2 borrowers, that's after 30 years. For Plan 5, it's 40 years. But here's the catch. Most people won't repay the full amount before it's wiped out. That means your student loan behaves more like a graduate tax than traditional debt. So is it really a loan? Technically, yes, but practically, it's more like a contribution tied to your income. And that's important to remember, because in 2025, many British students are realizing that it may not make sense to overpay or aggressively clear the loan early unless your income is very high. For most, the best plan is to treat it like a long-term payroll deduction and focus on other financial goals, like buying a home or investing. Also, in 2025, maintenance loans are still available to cover living costs, and many universities offer bursaries or scholarships based on income or academic merit. If you're studying in the UK, always explore non-repayable funding first. Now, let's pause for a second and compare. If you're in the US, the best plan in 2025 is to start with federal loans, enroll in the SAVE plan, and explore forgiveness options, especially if you work in public service or nonprofits. If you're in Canada, take full advantage of zero-interest federal loans and provincial programs, and don't rush to repay unless your income is stable and high. And if you're in the UK, understand your repayment plan, Plan 2 or Plan 5, and avoid overpaying unless you expect to earn a high salary consistently. But regardless of where you live, here are a few golden rules in 2025 for managing student debt. First, borrow only what you need. It's tempting to take the full loan offer, but every dollar or pound you borrow is money you'll pay back with time, stress, and potentially interest. Second, understand your repayment terms. Know when repayment begins, what the minimum payments are, and how to avoid default. Use calculators provided by your loan service to project future costs. Third, look for forgiveness or grant opportunities. Every country has special programs for healthcare workers, teachers, and rural placements. These can erase thousands of dollars from your balance. Fourth, don't ignore your loan. Stay in touch with your loan servicer. Update your income and contact details. If you're struggling, ask for deferment or forbearance options before you miss a payment. And finally, educate yourself. The world of student loans is evolving. Governments are introducing more flexible, borrower-friendly policies, especially in 2025. But the responsibility is still on you to make smart choices. So to wrap it all up, the best student loan plan in 2025 depends on where you are and what you need. But in every case, the smartest move is to borrow less, borrow smart, and understand how your repayment plan works.